Good morning, everyone. Got a lot of people registered for this one. We're going to give another minute, maybe two, and we'll get started here. Thank you for those who are on time. I greatly appreciate it. Good morning or good afternoon, depending on where you're on the country. My name is Josh Elohim. I'll be your speaker for today regarding a new way to plan for long-term care. Just some quick housekeeping for the purposes of the call. Everyone's going to be muted so we can get through this smoothly. If you do have questions, please put them in the chat box. I promise I will get to as many as I can, and we'll go and have some fun here. So if for some reason you're not signed up for Quote and Apply, there is a link in the chat box where you can go ahead and put in your, you can click on the link and you can go ahead and set up your account complimentary. If for some reason that's not working for you, you can just put it in the question box there, your NPN number. We already have your email address. So all we need is your NPN and we can give you our software complimentary. So go ahead and kick off all your shoes, sit back, and let's have some fun here. So again, a new way to plan for long-term care. We all know that there's two different types of long-term care. We have traditional long-term care, which we call standalone, and then we have long-term care riders. So I'm going to dive into this. I do want to just kind of give you all a visual. Hopefully you've all seen our software. If you have not, here's the software. You put in your basic information. We can kind of fly through this pretty quickly. Health class, smoking status, date, height, weight, date of birth. And I want to step too far here. And look how fast we give you rates, right? Instantaneous, on the spot. So what are our challenges here? Well, traditional long-term care has been great for a long time. What do I mean by traditional? Again, standalone long-term care. So in other words, this is strictly just for long-term care. It covers long-term care. So in the past, this was phenomenal. It was very inexpensive. So it was really cheap. We had built-in inflation riders, 3%, 5%, and we had about 25, 30 carriers that offered traditional long-term care. Life was good. Well, just so you know, about 15, 20 years ago, we started having all these claims come up for traditional long-term care, claim after claim after claim. So it became a real issue to the point where now, when I do that same comparison, when I look at standalone long-term care now, it's actually really expensive now, where it used to be really inexpensive because of the claims. But the second problem that we ran into is that the increase, a lot of these carriers have had price increases. So Mass Mutual just had a 75% price increase on their long-term care. Imagine being, 80, 90 years old and having that happen. It could be a real detriment. I know that Genworth had a huge price increase. So we're the ones that get the emails saying, hey, what do we do here? But the third thing, which to me is the scariest part of it, is that long-term care is use it or lose it, traditional. You can pay for 20, 30 years, never have a long-term care issue, and guess what? All your money is gone. That's pretty expensive auto insurance. Would you all agree? So what's the solution now? So I would joke around, the life insurance carriers finally got smart. And what they did was they created something called a long-term care rider. Let me keep this very simple. The way this works is whatever my death benefit is, I add the long-term care rider to the policy. It gives me a pool of money for long-term care. If there's a long-term care issue, it draws down from the death benefit dollar for dollar. Does that make sense, everybody? So it's just like traditional long-term care. How do I do this? I'm going to go to lifetime coverage. Here we go. And I run my illustration, right? So looks like the questions are already starting to come in. I love it. So there it is. So that's traditional long-term care. I do want to give you, so that's, I push that button there. So really all these products here, you can add a long-term care rider for the most part on all of these here. Again, I'm going to give you some options, but I do want to give you a visual first. So can everyone see this? This is a marketing piece, which is attached in the handouts. So you can go into the handouts and grab this here, okay? Well, what I like to call long-term care riders is living benefits. What do we know life insurance as? For the most part, everybody, right? We know it as death benefit. Well, no, that's just term insurance. So we have to start changing the mindset of your clients to not think about death, but to think about life, hence the word living benefits. This is a really cool marketing piece here. So look, discover the living benefits from long-term care riders. Now, you don't think you need long-term care, you might want to potentially think again. Look at this, the chances of being in a fire, 1 in 1,200. Chance of being in an auto accident, 1 in 240. Look at the chance of needing long-term care, 1 in 2. How crazy is that? Now, the thing is, you wouldn't go without this auto or home insurance. Why are we risking going without long-term care? The biggest shocker for me is look at the cost of long-term care in 2013. Does everyone see that? $75,000 a year. How about in 2048, where we might potentially need this? Look at the cost of long-term care then. Almost $500,000 to pay for long-term care. You think there might be an issue coming our way? I did a webinar called the LTC Tsunami that's coming. It was my largest webinar of all time. We had almost 500 people. It was unbelievable. So if you look here, though, this piece also explains how the rider works, right? So again, we kind of talked about this, but in essence, you have a long-term care rider to add it to the policy. Whatever your death benefit is, you get that pool of money. If there is a long-term care issue, it draws down from the death benefit dollar for dollar. Any benefit that's taken out for long-term care comes out tax-free. Anything that comes out of the cash value of the policy comes out tax-free. And then the death benefit obviously is always tax-free, correct? So this is a really cool marketing piece you can use for your clients. Again, it's right there in the chat, in the handout, so you can click on that and you can grab that piece. If you still need it, you can reach out to your marketing manager, to me, and I'll get you that marketing piece as well. So, and then again, no matter what happens in this new scenario, the benefit's going to be used, and I'll go over that in a second. But there's a case study about Mary, who's 55, whose parents had some major long-term care issues. She did not want to be a burden on her kids, so she took out a life insurance policy for $500,000. She added the rider. She had a pool of money up to $20,000 to pay for long-term care. So everyone in that situation is happy, because if she needs the money for long-term care, she has it. If she doesn't, then she has the cash value or she has a death benefit. So really cool marketing piece I want you to all look at there. Okay, it's called Perfect. So let's go back here. So again, there's a big issue here. Does anyone know by a raise of hands, which I can't see, what happened in the state of Washington? Anybody? Anybody? They made it a rule, like they've done with a lot of states for health insurance. If you don't have health insurance, you were going to be taxed on it, right? They did the same exact thing in the state of Washington for long-term care. A lot of people could not believe it. We've never seen an influx of long-term care business like this in our entire lives. It got so crazy in the state of Washington that all the carriers had to pull their products because there was too much business coming in. We had one agent from our group here write 200 policies in one day for long-term care. Well, guess what? They're thinking about doing this in 9 or 10 other states, and I've heard that your state's one of them. I know California is one of them. So if you're in California, there's a very good chance here. So you really want to get on top of this stuff and get educated on it and learn. So again, how do I do this on Quote and Apply? So there's two options I like to go with here. I can do universal life if I want to have kind of more of a death benefit focus and just a little bit of cash, or I can do protection IUL if I want to have death benefit, cash, and have the rider as well. Did everyone see what I just did right there? So I just ran a permanent illustration. You see how fast that was? This software gives me goosebumps, and I work here. It's unbelievable. So now all I'm going to do here is scroll down with. See, as everyone see here, I do have some options for. I can do critical and chronic illness. I can do with chronic illness. You want to make sure this says with LTC. So we actually had some challenges with Washington, and some people picked the wrong option. So we wanted to make sure we clarify this. Does everyone see with LTC rider right there? That's what you're going to want to pick. So LTC, you can't even use the word LTC if it's real LTC. What do we mean by that, Josh? Well, I'm glad you asked that question. You have to have 2 of the 6 ADLs. I can't feed myself, I can't bathe myself, etc. I have a 90-day elimination period, and I can accelerate that death benefit dollar for dollar. That is true long-term care. Well, how does the critical chronic illness work then? Well, just like it says, it has to be a critical or a chronic illness to be able to accelerate that benefit. How do they decide the amount? Typically, it's decided by the carrier. They have an amount that they decide on their side. When it comes to long-term care riders, again, you can get up to 4% of the policy. Once that trigger happens, 2 of the 6 ADLs, 90-day elimination period, you can accelerate that death benefit up to 4% on the policy. So have a look here. So I added the long-term care rider. I'm not a huge fan of paying forever. So if I want, I could change those options or do a full pay. I like a 10 pay. And all I do is hit the rerun quote. Never in the history of our business have you, the agent, been able to pivot right in front of your clients so fast. So I help agents out all the time with their clients do this. If you're not comfortable, get me on the call. I have a call right after this with an agent and their client talking about long-term care riders. So you're all smart people. You hear this once or twice from me, you're hitting the ground running. Why would I want to get on the phone with the client on the spot? Because the software does everything for you. I'm the agent, you're the client right now. What we forget as people is that we're visual learners. 90% of us learn visually, so we have to see something. So everything I talk about here, I'm not going to just tell you, I'm going to actually show you. And when I see it and then I hear it, then it clicks and then I make a decision. Does that make sense, everybody? People forget about that. We tend to talk people to death till they're blue in the face. We don't show them anything. And guess what? The client doesn't retain anything. Well, how about this? I just clicked on this PDF. Does everyone see what I just did right there? We are in the illustration here, folks. We're dancing. So instead of me just telling you about adding a long-term care rider, how about I physically show you? Does everyone see that? There's 2 companies I like for this. I like John Hancock. I like Nationwide. They both have a true long-term care rider. So again, we're talking about a male here, preferred, age 43. And look, this is the 10 pay. This is my 10 pay premium. I'm paying this during my income earning years. So I can see 10 years down the road. There you go. Can I pay for this out of my business? Absolutely. This is a great option for business owners to have this conversation with. You're not comfortable? That's what I'm here for. Book a meeting in my calendar. I'll get on the call with you / for you. So here we go. Here's my 10 pay premium. There's my $1 million pool of money for long-term care / death benefit. And then here's my 4% or up to $40,000 a month to pay for long-term care. Josh, why do you say up to? Just so you know, there's a per HIPAA diem amount that's available for the state. In California, we're about $320 a day. You multiply that by 30 days, you get about $10,000. That's the most you can pull out of that policy. So there are not inflation built into these, like your normal traditional, long-term care. So what they do is, as that per HIPAA diem amount increases, you're going to be able to get more and more money out of your policy going up to that $40,000 amount. Does that make sense, everybody? So what does this qualify for? Here you go. Would you all agree that people want to get taken care of in their home? To me, that's why you buy these policies, so you don't have to go somewhere else. Someone comes to you, so that does work here. Then I can dive down to the meat and potatoes, right? So I can go into the illustration. So I typically, this is my presentation. Everyone have a look here. I mean, we're in the illustration, we're doing this. What happens when you answer your client, all your clients' questions? They make decisions. That's really it. So just to recap here, we got a male, preferred 43. Josh, that person is so young. Why are you having a long-term care conversation? I'm going to show you that in a second here. This is not going to look the same on a 60-year-old. It still looks good, but not the same. Let me show you why. So the things I point out, again, is why are we having this conversation? You get a pool of money of $1 million. Can everyone see that okay? There you go. So that's the first thing. That's your first bell and whistle compared to the, there you go. The second thing, we call it a living benefit too, right? I talked about living benefits. What can I get while I'm alive? This is a living benefit, not just death benefit anymore, like term. Okay, the second thing that offered, let me zoom back one step. There we go. The second thing we offer is a living benefit. We also have some cash growing in this policy as well. So if you don't use a long-term care rider, how about money growing in this policy right here? Does everyone see that? How does it grow? This is an IUL. It's based on the S&P 500. We got caps on the product and we got floors on the product. There's your stability. So if the market does 20%, you don't get all 20, you get your cap of 8 to 10. Market does minus 20 the next year, you have a zero floor. So you're going to participate in the upside of the equation, but not the downside. This is a living benefit because I can pull this money out of this policy if and whenever I want for whatever reason I want. Perfect. And why does this sizzle for a 43-year-old? Let me show you. So in my 10-pay scenario, I put in $14,669 a year, or $146,000 for 10 years. Well, because this person is younger, they have time for the money to grow. This is just compounding interest, right? Let's look at this person's age 65 here. I've still put in my same 146. Look how much money I have sitting in my retirement and my cash value. Does everyone see that? I never want to use the word free insurance, but guess what? The money you put in is about almost 20K more sitting here in your retirement income bucket, your tax-free retirement income bucket. If this was a 60-year-old, it wouldn't be like this. This is why I encourage people to start having conversations with their clients earlier, because they're not parting ways with their money. All they're doing is moving it from a taxable bucket to a tax-free bucket. Does that make sense, everybody? That's your second bell and whistle. Obviously, the third bell and whistle is we have a death benefit. God forbid you pass away too soon or you die too early, either or you live too long, sorry. Now, why is this great for business owners? Because I can pay for this out of my company. A lot of people say, can we write that off? I say, consult with your CPA. That's not my job, right? Consult with your CPA. So again, to me, the whole beauty of creating non-reportable tax-free income is you buy life insurance with after-tax dollars. That allows you to pull the money out tax-free. Where are taxes going? Are they going up or are they going down? I think most of us know the answer to that question, right? So a good analogy I use is, would you rather pay taxes on the seeds you're buying or pay taxes on the harvest? And most people would say, I'll pay taxes on the seed because the harvest is going to be more. That's all you're doing right here. There is a really cool marketing piece that I'm going to give you a visual on. It's also in the chat box. John Hancock did this piece. I think it was really well put together. It's called Dare to Compare. And what it does, it's going to show you all the companies that have, do they have a long-term care rider? Do they have a critical chronic illness? Does everyone see that? So you got John Hancock, American General, Cordia, AXA. So it's going to show you what type of rider they have, right? Is it reimbursement versus indemnity? How does the monthly benefit get charged? So you can go through this. And then most importantly, what's the price of the rider? Does everyone see the cost here? And then there's multiple carriers. This is in your handout. It's called Dare to Compare. I'd highly recommend just educating yourself. Why would I want to do that? Because guess what? Long-term care, these states realize they're not going to have the money to pay for this. So they're putting these mandates in place right now, or at least trying to be taxing this. So we've got calls from 30 and 40-year-olds from the state of Washington. That's never happened before, ever. But again, we see the writing on the wall here. All you need to offer the long-term care rider is an 8-hour certificate, LTC. That's it, your CE credit. 8 hours is all you have to do. Doesn't take 8 hours, by the way. That's all you need to be able to offer long-term care riders. So that's really how it works there, right? The beauty of our software, your client's like, hey, this is great. I really like what I'm seeing, but what does 750 look like? Well, in the past, you have to go back to your wholesaler. You have to wait a week to get your client back on the phone. Well, now I just put in 750,000. I go to the bottom, I hit the rerun quote button. Again, never in the history of our business have you, the agent, been able to pivot so quickly right in front of your client. Does everyone see how fast that was? You know, I like Nationwide, so I can click on Nationwide. Here's the option here for Nationwide, right? What does 250 look like? What does 500 look like? And then if I want to pay, how about paying for 15 years instead of 10 years? Do you see how easy it is to pivot? Very, very simple. If we make it easy, they will buy. That's really it. So I see the questions coming in here. I love it. This is so important to start having these conversations with your clients, because we all have what we call the F word, right? Not what you're thinking, but we all have a fiduciary responsibility. You don't want your client ever coming back to you and saying, hey, you never told me about this long-term care thing that was going to be a problem. I'd rather you say, yes, I did tell you, you told me you couldn't afford it, right? So we just got to, I always say our job is not to sell anything. Our job is to educate people and spread the good news. That's really it. If they don't want it, you dip your hands in the water, you go like this, and you say, I've done my job. Actually, I'd rather you have a letter written up, making them sign saying, I do not want this long-term care rider you offer to me. And that usually makes them second guess and they end up doing it after that, right? So perfect. I see more questions coming in. I love it. I love it. So in a nutshell, that's how long-term care rider works. Just to recap, I have a life insurance policy. I add the long-term care rider. It gives me a pool of money of whatever that death benefit is for long-term care. Let's just say $1 million. If I have when I add the rider, if I have a long-term care issue, how does this trigger? 2 of the 6 ADLs. I can't feed myself. I can't bathe myself, etc. I have a 90-day elimination period. I can accelerate that death benefit dollar for dollar. That's really it. It's very straightforward. Now, let me recap here. We talked about the traditional long-term care, right? We used to have about 25, 30 carriers. Now we have about 3. All of them have ran for the hills for traditional. When I compare this to traditional, this is a life insurance chassis. So as long as I'm not 100 years old, the pricing should be competitive, right? The second thing is that as long as I pay my premiums, I'm not going to have an increase in my pricing, right? That's really important. But then the third thing, which is the most important thing, is that no matter what happens here, the benefit's going to be used. Either it's going to be used to pay for long-term care, it's going to be used for retirement income. By the way, paying for long-term care would be tax-free. Pulling it out for non-reportable tax-free income would also be tax-free, or it'll be used to go to your beneficiary's death benefit tax-free as well. No matter what happens with this scenario, the benefit's going to be used. Does that make sense, everybody? Really important to understand. I work with a lot of financial planners. Financial planners are always wary of their AUM, right? I get it, 100%. What they don't realize is that what this is doing here is not designed to take away from their AUM. It's actually designed to protect their AUM. There's no faster way for your clients to lose their nest egg than to have a long-term care issue. So why don't we plan for that like we plan for everything else? If they need to pull money out, we don't want them pulling out any money out of your AUM. We want them pulling it out of a non-reportable tax-free bucket they could pull from if and whenever they want. So it protects all your other buckets. This is what we're looking at right here. So let's say a client wants to move forward. This is great. Or they say, what's next? We all know what that means, right? And I'm always like, whoa, slow down there. I'm glad you like, in this situation, Nationwide or John Hancock, but they want to date you as well. What do you mean? in terms of an application and an exam, right? That's all you're really saying yes to right now. Just so you know, this is a life with a long-term care rider. I don't want to beat around the bush. This is a 60, 70-page paper application, very long. In the past, though, you pull this bad boy out, your client has a heart attack on the spot and dies, there goes your case, right? Well, now, all I do is hit this continue button. Does everyone see it right there? Look, it brings me right into the application. By the way, we have an open API, so if there's any integration people on the call, we can pre-fill almost half this information. So look how smooth this process is. Their address, all their business information, pre-filled. Again, we do a lot of key man and buy sell policies. This comes up all the time. What's the difference between a key man and buy sell policy and regular term insurance or whatever, regular insurance? The only difference is the ownership. Who's going to own this policy? The answer would be no. Does everyone see a business right here? That's it. That's the only difference. You can write a tremendous business case right here on the spot. It's going to ask you, if it's going to be a key man policy, it'll be the owner will be the business and whoever the owner is. We also do the buy sell, which is normally what we call a cross purchase, where you're going to have each of the business owners own the other person's policy. Does that make sense? So just to keep it simple, let's just say yes, they will be the owner for now. Who's going to be the beneficiary? Trust, business, individual. I'll just say individual to make it easy. We'll say Mrs. Doe. We'll say that's the wife. We'll keep moving here. I can add a contingent beneficiary to back up the primary. Income, assets, liabilities, social. We can pre-fill all this as well. You guys are going to, if the person has the existing life insurance, I can add the policy right here. Let's just say no for now. How about those nightmare APSs that the carriers will ask for to slow down any case? We've got a built-in portal here. Well, all you do is just log in, you doing this or your client's doing this, and look at this. I can pick my facility here. Let's say it was Kaiser. We call it the kiss of death, right? Takes forever for records. I search Kaiser, find my Kaiser. Client puts in their username, they put in their password. We're able to pull those medical records instantaneously right on the spot. Absolute game changer for our business. If they don't know it, they can reset it or just create an account or just say no. Look, we can send a text message or an email, the client get it on their own free time, or we just say no, right to the medical questions. So I can answer these questions very quickly. Just answer the medical. I can plug in my accounting number, routing number if I want to bind coverage, or at least just not have to do this again, or just say no and skip it. By a raise of hands, which I can't see, how many people have had issues with exams? What a nightmare, from the examiner to the agent to the client to the GA. That's 4 ways things can go wrong. How about a live calendar based on any zip code you put in the country of real times to book your exam? So look, you pick your day, I pick my time. We just booked the exam. It was that simple. The client gets a calendar invite right to their calendar, so don't forget about the exam, as well as the examiner calls the client. Ever since we've implemented this new system, our exam completion ratio has gone through the roof, and you can probably see why, right? So last step, for some reason, if I'm not using the software, I can sign via email. If I am, I would just hit sign now. Or if the client's doing this 100% by themselves, they would also hit sign now. Or we make it past this pandemic, you meet your clients face-to-face, you would also hit sign now. So all the information now is auto-populating the DocuSign. I'm sure you're all familiar with this. There we go. And just like that, bada boom, bada bing, a fully completed 60, 70-page paper application with long-term care rider on it. So I normally pass the screen at this point, but since we're on the Zoom, I will not. You all know how this works. I just adopt my signature. Here's why I pass the screen normally to the client to make this real. And we just point and click. Again, you can see how long this is. I hit finish. Welcome to the future where life insurance is heading. Sorry it took so long. I can't shake my New York sarcasm no matter what I do. So that's a fully completed app. Just so you know, the most important person in the conversation, which is called the client, is done. They don't have to do anything else. Once the client gets their email, once the client DocuSigns, then you're going to receive an email as the agent for you to do your part. You put the last 4 of your social to verify, you sign, you do your agent report, and then you're done. And then all the information goes into your BOSS system. This stands for Back Office Support System. And what this does is it tracks all your business from submission to commission. So the only thing I want to show you here is if you want to book a meeting with me, you just hit Meet with Josh. You see it right here? And you can just book a meeting right in my calendar. I'd prefer to meet with one of your clients to start off. So go through your book of business, see who the right prospects are, whether it's individual or whether it's businesses. Let's get on a phone call. I promise you, I don't push anybody. I just spread the good news here. I have a 90% close ratio. Why is that? Because I can show everyone the stuff I'm telling them. That's really it. So in a nutshell, that's how simple this is to write life insurance with a long-term care rider on your life insurance software link. Again, if for some reason you don't have a link, you can go into the chat box where I put your link and you can create your own life insurance software today, complimentary. If for some reason that's not working, you could always go into the questions, just plug in your NPN number, your national producer number, or if you don't know it, your life insurance license number, and we will set you up with an account. I like to keep these things around 30 minutes. That's what I got for you. I'm very fortunate to have you on the call here. And I would hopefully we can start offering your clients long-term care riders and start changing the game to make sure they're prepared for the future. So again, thank you all so much. I really appreciate your time. There are some questions. I'll give it a second here. Please ask any question you have right now. And there will be a recording of this going out tomorrow. So that way, if you miss something, or for the people who missed it as well. So thank you again. And I'll wait a second here. I appreciate all your time, and everyone have a blessed day. So someone said, is it common to do both LTC and chronic rider? So again, if you said, Josh, what's the cream of the crop? I'd say the cream of the crop is long-term care rider. The critical and chronic illness are not the same because you have to have a critical or chronic illness to be able to take money out of that policy. What is the best of the best? What I just showed you. Long-term care rider is the best. Now, I'm not going to beat around the bush. There is full underwriting. So you have to go through underwriting for life insurance as well as underwriting for long-term care. But again, it is the best of the best. So that's a good question. So I think I already answered this, but someone says, does a business life insurance policy key person have an LTC rider option? Absolutely. That's probably the most important. I mean, everyone's important, but a business owner, you know, it's not just about them dying or becoming disabled. What happens if they get into a bad car accident and they're down for a while? The long-term care rider can be used after 3 months. So it's a great feature to add to any business owner conversation. Josh, I'm not comfortable yet having that conversation. Look at my screen here. Meet with Josh. That's it. Book the meeting. I have a meeting in 30 minutes with a client and with an agent and their client to talk about this exact thing. So that's really it. Give me a chance. Give me a shot here. I don't sell anything. I just educate people. That's really it. And I'm ready to go. I've been doing this for 12 years now, and I'm very passionate. Hopefully you can feel my passion there. So hopefully that answers your question. So someone said if the employer pays the premium, is the distribution taxable? So I think if it's going to be the owner of the company and they're paying the premium, a lot of companies they're doing this for the owners, right? So if it was the owner, then the answer is no. If you have another employee you're doing this for and they're not paying the premium, then it could be taxable because it depends who owns the policy, though. Does that make sense? So if I'm paying this for an employee, then I want to be the owner of the policy. Maybe I have a golden handcuff set up or a vesting schedule, stay with us for a period of time, and then we'll gift this policy to you. If there is a gifting or moving of the ownership, then there is a taxable event. But if I didn't pay any of the premiums as the employee, I'm happy to pay taxes on that. Does that make sense? Jeff, hopefully that answers your question. I love the questions. So someone asked, is there a copy of it? Yes, there will be a copy sent to everybody. So someone said, does a rider do the same as a standalone as far as protecting personal property? So, I mean, ideally, it protects, you know, it gives you the money you need to pay for stuff. So, I mean, whatever you want to do with the money is really up to you. But obviously, you're going to use this to pay for your long-term care, if that makes sense. So someone asked about training for annuity and disability insurance. We're here to help. Give me a call. I'd love to go over some scenarios. If you want anything else that's not on quote and apply, all you do is go to quoting on the left-hand side here, and then I can go to request a quote here, and all you have to do is change the line. Here's disability right here. Does everyone see that? Here's annuities right here. So you can actually play around with this and get your quotes right there on the spot. If you need help, give me a call. I'm here to help you out. I love the questions. Good questions, everybody. All right, just a few more. Someone said that I'm not appointed with you guys. How does that work? Do I have to get appointed with all the carriers? That's a great question. So it used to be that way where when you're new to us, you have to get appointed with all the companies up front. Well, all these carriers forgot about the 90-10 rule where 10% of agents write 90% of the business. They were doing all this work making people get appointed, but then weren't writing any business. So now we have something called just-in-time contracting. So we have a one-time packet that you fill out in our system. It's just one time. Once you fill it out, just to give you a visual here, once you fill that packet out, you're good to go. You can write with any of the businesses we offer. So here are the questions, the check marks. Once these are all checked off, you're good to go. And then this sits in our system. Once an application comes in, and only at that time, we'll send your packet to one specific person, whatever the carrier is, and only that one carrier. Does that make sense? Okay, just one or two more. We got a lot of questions here. I love it. If you need to jump on a call with me, let me go back here and show you. Here's my contact information. So pop up in a second here. I'd love to jump on a call. Here's my office number. Here's my email address. So if you want to reach out, or you could just book a meeting with me and we can have a one-on-one, try to get all your questions answered. Okay. I think we'll shut it off there. I really appreciate all you staying on here. Again, book a meeting. Let's get going here. Let's have some conversations with your clients. If you do have more questions before we do that, please reach out to me. If you don't have our software, go into the chat, click on the link. You can sign up for your complimentary account, or you can put your NPN or your license number in. I really appreciate all your time. Looking forward to our next training, okay? Happy selling and have a blessed day.